All right, welcome to day 5. Today, we are we are dismantling the single biggest, most dangerous myth in personal finance. We're talking about a belief that's so deep in our culture that challenging it feels, I don't know, almost wrong. Okay, let's get right into it.
I mean, you've heard this 1,000 times, right? Cash is king. Your parents probably said it. You hear it from financial gurus on TV. It's presented as the ultimate symbol of safety, of security. A fat bank account is supposed to be the peak of financial stability. But what if that's all wrong? What if I told you that this so-called king is actually a traitor in your financial court? What if holding on to this idea is the very thing keeping you from real financial freedom? Look, let's be brutally clear about this. Hoarding cash isn't just a bad strategy. It is, mathematically speaking, the only financial strategy out there with a 100% guaranteed chance of making you poorer over time. I'm not talking about a risk of losing, I'm talking about a flat-out guarantee. So, what's the culprit here? Well, it's that silent thief we all know as inflation. You know, every time more money gets printed, the dollars you've worked so hard to save get a little bit weaker. It's like an invisible heat in the room that's always on, slowly but surely eroding what your money can actually buy. And honestly, this is the best way I can think of to picture what's happening. So you need to stop thinking of your cash as this solid, dependable rock. Instead, I want you to picture it as a giant ice cube sitting on your kitchen counter. It looks solid, sure, but that invisible heat is always there, and it will, inevitably, turn it into a puddle. And that puddle, that's your lost purchasing power. And this right here, this is the psychological trap we all fall into. You log into your bank account, you see that number, let's say it's $10,000, and your brain just goes, phew, safety. But the reality is the value of that $10,000 is getting smaller every single day. Let's just make this real for a second. With an average inflation of just 3%, that same $10,000 will only be able to buy what about $8,600 can buy today in just 5 short years. The number on the screen doesn't change, but what it can do for you is constantly going down. 100%. That is the probability that your cash will be worth less next year than it is right now. Think about it. Stocks, they might go up, they might go down. Real estate, same deal. But cash only goes one way, and that's down in real value. Okay, so if we know cash is a guaranteed loser in the long run, should we just get rid of it? Is it useless? No, absolutely not. But we have to totally redefine what it's for. It is not a place to store your wealth. It's a tool you use to build it. For a disciplined investor, cash really only has 2 legitimate jobs. Number 1, it's your defensive shield. That's your emergency fund, right? It's what protects you when life throws a curveball so you don't have to sell your real investments at the worst possible time. And number 2, and this is so important, it's your tactical ammunition. It is the dry powder you keep on hand so you can go on the offense when everyone else is panicking and great assets go on sale. This is the big mental shift we all need to make. We have to rewire our brains to get this. Cash is not wealth itself. It's just the tool you use to buy wealth. Things like stocks, businesses, real estate, things that actually grow and produce more value over time. So, okay, if this is all true, why is it so incredibly hard for us to act on it? Why do we instinctively want to hoard cash when we know it's a losing game? Well, the answer is pretty simple, actually. It's primitive fear. Our brains, they're not really wired for the modern financial world. They're wired to avoid volatility at all costs. And this is exactly where that concept of neurofitness we've talked about comes into play. It's about training your brain, building up that mental muscle to override that knee-jerk fear response. It's developing the discipline to see a scary market downturn not as a catastrophe, but as the exact opportunity you've been saving that cash ammunition for. I really want you to let this quote sink in for a moment. You know that smooth, flat line you see in your savings account statement? The one that makes you feel so secure? It's a total illusion. That perceived safety is just masking a quiet, steady decline into being poorer. So, I want you to ask yourself this question. Right now, honestly, what is your brain optimized for? Is it wired to chase that feeling of safety from a number that doesn't change on a screen? Or are you training it for real growth, the kind that only comes from putting your money to work? Okay, enough theory. Let's make this real. Let's move from just understanding this stuff to actually doing something about it. Here is your action plan for today. Step 1.
Sometime today, I want you to literally pull up your bank account on your phone or computer and just look at the number, the total balance. Step 2. As you look at it, I want you to recognize that every single dollar sitting there that isn't for your immediate survival needs, it's not working for you. It's dead weight. It's that melting ice cube. And third, just make the mental commitment. Prepare yourself to turn that passive, depreciating cash into an army of working soldiers ready to be deployed. But listen, we don't just send soldiers into battle without a defensive wall, right? And that brings us to the very next critical step. Before we even think about deploying them and buying assets, we have to build our fortress. We've got to construct that defensive shield we mentioned. So I'm going to leave you with this thought. We've established the fact your money is melting. There's no debating it. The real question now is your defensive wall ready? Because tomorrow, on day 6, that is exactly what we are going to do. We're going to build that ultimate emergency fund. I'll see you then.